Hey! Hi guys, and welcome to Macro Markets, where we analyze how the macroeconomic news and events impact the crypto trading. I'm your host, Marcel Pechman, a veteran stock markets and derivatives trader and analyst at Cointelegraph. Today's show will start by discussing why the Federal Reserve's latest move has been pinned to the stock market rally. Stocks rally as investors shake off Hawkish Fed. Stocks rallied on the heels of the Federal Reserve's hawkish hold, which suggested more rate hikes are likely later this year, while rate cuts in 2023 are now off the table. First of all, what is hawkish in the terms of finance? Well, it means the Federal Reserve is using a more aggressive tone. The opposite stance would be dubbed a dovish attitude, similar to a quiet dove bird instead of a scary hawk. Part of the market was seriously doubting that the Fed would continue to sustain interest rates above 5% for the remaining of 2023, as the risks of the economic recession increase. But apparently, they were wrong. I don't want to dive too deep in this macroeconomic nonsense, but the big picture is the US government is basically said they're not afraid of unemployment and weaker corporate earnings, as long as the inflation is under control. So, why the hell did the stock market rally? Well, there's at least two possible answers to that question, but most likely it is a mix of both. A, there was a risk of the Federal Reserve raising interest rates right now, which did not materialize, so by postponing the move, it created further breathing room and time for companies and the financial sector to adjust. B, the recent macroeconomic data, namely the 4% inflation and the 1.6% retail sales growth, gave confidence to investors that the recession is unlikely taking place before September, giving them enough time to benefit from two positive quarterly results. I know, your next question is, if stocks are up, why is crypto dropping like a stone? Well, my best guess is that the crypto regulatory environment is definitely not favorable, and the two biggest risks for the US dollar have dissipated: the debt ceiling and out of control inflation. Considering the real estate sector, especially the commercial properties, are doing poorly, investors seem right when picking the stock market as their to-go instrument, their preferred instrument for the upcoming months. Whether or not those valuations are excessive is a different question. So the thing is, there are no real drivers for cryptocurrencies right now, and investors understood that the inflation came under control. So in their minds, and I think they're right, they're gonna have at least 2 quarters of positive results, of positive corporate earnings. So staying in stocks or investing in stocks for the short to mid-term seems the right choice. Gold is already next to $2,000. The real estate market is tanking, or at least not going up. So when running out of options, considering that market is paying more or less the same as the inflation, they're not really earning anything investing in the bond market right now, in treasuries right now, they're going to opt for stocks. That's why the stock market is rallying and crypto is not. Now, let's move to the other side of the pound and discuss the Europe situation. ECB raises rates to a 22-year high and signals more to come. The European Central Bank raised interest rates for the 8th consecutive time, as expected, and signaled further policy tightening as it battles high inflation. At 6.1%, inflation is already well below double-digit readings from last autumn, and a recession, along with a sharply lower commodity prices, will cool price growth quickly over the rest of the year. It becomes clear that the ECB, the European Central Bank, hasn't been as hawkish, as aggressive as the US Federal Reserve, and are now playing catch-up on their 3.5% basic interest rate. Moreover, Chair Christine Lagarde confirmed the closure of the 3.2 trillion euro asset purchase program. So they're no longer buying assets to sustain their prices. So that's something in the past. They're saying there's no reason to continue with those stabilization programs. That was previously announced. They're going to stop purchasing those bonds and assets on July 1st. So no news there, but there's less incentives, there's less protection on the market from July 1st onwards. So basically they're admitting that they were too slow and at least somewhat responsible for the economy overheating. But they also believe that raising interest rates further will not cause a major economic collapse. That might be true, but no one knows the answer. From one side, investors gave the ECB a vote of confidence, since the euro reclaimed a 6% premium versus the US dollar since December 2022. But more importantly, the euro sovereign debt 10-year credit default swap, which acts like an insurance, is trading at 3.1%. So the cost to protect a debt from the eurozone is at 3.1%. That's the insurance premium that you pay right now, the CDS. As a comparison, the US Treasury CDS is trading at 3.7%, thus signaling higher risk. As crazy as it sounds, even Spain, Portugal, and Belgium sovereign debts CDS are below the 3.7% from the USA. That's because the euro currency might not be the leading foreign global reserve, but it's the biggest fiat money out there. Of course, they have the advantage of combining 19 countries, including Germany, France, and the Netherlands. That brings us to an important question. Bitcoin Maxi has been calling out the US dollar as the biggest fraud ever, as the country terminated the gold convertibility in 1971 with Nixon. But the truth is, the US holds the biggest GDP, so the production, the largest gold reserves, and the biggest oil production. Yes, you heard me right. The US produces more oil per year than Saudi Arabia, except it doesn't export much, focused on domestic demand. So what's the take on the Eurozone for Bitcoin and cryptocurrencies? Well, my friend, maybe the US dollar will hold their dominant reserve status for longer than expected, but the odds are not looking great for the euro currency, as the region has already entered a technical recession after 2 quarters of negative growth. The thing about crypto is that you never know where the positive triggers and negative events might come from. This is valid for ETF proposals, banking crisis, wars, cyber attacks, economic embargoes, you name it. Remember, the euro is only 10 years older than Bitcoin. Which of those currencies do you think will last longer? Just to be clear, that's my own personal opinion. It does not reflect Cointelegraph's official view. What I want you to extract from today's show is 2 things. A, there's some correlation between stocks, the stock market, the S&P 500, and cryptocurrencies. But sometimes those drivers are not aligned. In this case, the Federal Reserve deciding to postpone the interest rate increases benefits the stock market, but doesn't do much for cryptocurrencies. Investors of Bitcoin and cryptocurrencies were expecting a higher inflation, were expecting some trouble on the debt ceiling, and none of that happened. So they are disappointed. On the other hand, the investors in stocks market are more than happy that the Fed is not raising interest rates right now, so the cost of equity, the cost of capital for those companies remains lower, comparing to an increase to 5.5% from the Fed, which did not occur. So they're more than happy. That's why the stock market went up and the crypto market went down. The second point I want you to take home from today's show is that the ECB, the Eurozone, is in a much worse, a much weaker position when compared to the USA. So it doesn't matter if the US dollar gains value against the basket of global currencies, the DXY index, as long as the other currencies, namely Japan or the British pound or the Switzerland franc or the euro, are losing value against Bitcoin. So It doesn't matter if US dollar reserve status remain valid for the next 10 years, as long as other weaker currencies lose value and Bitcoins remains stable or gain status or gain prices against those other currencies. Remember, right now in 2023, the euro is the leading global currencies of the world in value. If Bitcoin surpasses this currency in 4 years' time, it will be one of the greatest features, one of the greatest feats of all time. It's going to be incredible. And this can happen even if the US dollar remains as the global's top currency and top reserve. Well, that's it for today. Remember to like and subscribe the new Cointelegraph Markets and Research YouTube channel. See you!